this is how I managed to catch a trade that was 1.4R. So when you first look at the higher time frame, we can see that for a long time GBPUSD has been bearish because we have been breaking lows as the market continues to trickle to the downside. So the much more significant point that began to make me active was when we broke this sell side liquidity. And of course that is clear because on the daily, this point of interest here is a fair value gap, right? And now that these recent weeks have been building out, the market has been clearing and nearing towards this point of interest. When we go back, we can see that the market did take some time before the reversal in this point of interest came about. So I wanted to see whether the market was going to break this buy side sell side liquidity, or was the market going to fail or indeed give us another price action. So the best option in this scenario is to always wait, because when the market develops or when price begins to build up, price tends to get very corrective. It gets to get stagnant sometimes because the market is at a very valid point of interest, or it is at a POI where there is a lot of wicks, a lot of liquidity that is essentially being swept or being printed in the market. Understand? So the only clear or the beginning of me understanding this market was when we began to have this first bullish candle structure. So we know that on the daily time frame the market is bearish and we are bound to break sell side liquidity, right? Because when the market broke this previous low, our confirmation of a bearish market was this buy side liquidity and this new sell side liquidity. Okay, and the fact that we had a pure point of interest that ended up holding is what made this criteria start to build up from the higher time frame. So what I personally like to do is build out my criteria on the higher time frame and use the lower time frames exclusively for entries and management, nothing else, right? So I will typically trade a higher time frame point of interest, a higher time frame market, and then execute on lower time frame. So in this case, what we can see is that there was a lot of fair value that was left in the market as the market approached this lower time frame external range low. So when we got to kind of reverse back into structure, that gave me a kind of insight that we could possibly filling in the fair value that is still unfilled yet before we could potentially get the strength to break sell side liquidity and then mitigate, right? Knowing that my higher bias is to see the market continue to the upside because we are looking at a overall bullish market. So I do not usually advise the people or advise anybody to trade higher time frame markets or counter trend entries because of how the market can be unstable in trying to maintain its intended order flow. But with this entry, I understood that we have a 4-hour fair value gap that I wanted to see specifically being respected. But this point of interest is too big for me to essentially trade off of just like it is. So what I did was begin to refine each and every time frame that I step into. So we can see that as much as we have a 4-hour point of interest here, on the 1 hour we begin to refine the market to properly see structure being built up. And we can see that as we zoom down to a lower time frame, we can see that at which point did the market go from breaking buy side liquidity, going to the upside, to then beginning to break sell side liquidity. So now the order flow is indeed in the direction that I wanted it to. And when that happened, the point of interest that I was looking at was going to have its probability in check, because now we have buy side liquidity above here and we have another area of liquidity that protects this point of interest so that we can see these lows down here on the left being taken out, right? So when the market begins to actually tap into price or tap into the structure. Further refinements for me were made on the 15-minute chart, essentially where I then came to take my entry. So when I looked at this 15-minute chart, what was clear was that from these few hours or these few candlesticks was the range of Asia, right? So it became apparent, or the other bias that began to build onto my criteria was the fact that the market was breaking Asia highs, right? So from the accumulation that the market did from Asia, we can see that the market broke buy side liquidity, going to our 15-minute fair value gap that is also within another 1 hour and a 4-hour fair value gap. So those confluences stack up to each other and increase the validity of this price action. And that is where I just stacked my position and just let the market run, because now we know that usually the market will sweep Asia highs or Asia lows, mitigate the point of interest before moving in its overall direction. So this was a clean and very clear entry that followed a very textbook kind of criteria. This is how I like to frame my analysis, my charts, to see what we can actually take a look at, right? So when we got our first break of structure, that is where I moved and took partials. That's when I took and moved partials to my first position. So this price here is where I stacked my stop loss for my second position, which is currently running right now. So I'm going to be holding this trade for the rest of the day today and see how the market is potentially going to build up, right? So today is my first trading day of the week, and so far it's been a win. I didn't trade yesterday because there was no criteria, and when there is a criteria in a time like this, I do not waste time, I execute. So tell me what you think about this trade that I took, and see you on the next one, guys.